Thanks for staying. Welcome back. Now, stakeholders in the financial industry have renewed calls for the Bank of Ghana to tighten regulation of mobile cash services. This, according to them, has become crucial, especially now that financial technology companies, also known as fintechs, including telcos, are allowed by law to also operate the services alongside banks. That's more in this Business Desk report.
The advocates argue that this has become necessary because many of fintechs are taking undue advantage of the mobile cash service to play into the banking space. The managing director of UBA, Abiola Bawa, is one of such. She explained this position to Joy Business after the Chartered Institute of Marketing Ghana CIMG lecture series on the topic "Who is threatening the lions of the banking jungle?"
All I was trying to present is that today, apart from the core banking function, the fintechs and the telcos have come into that all the various products that we provide, i.e. payment, account opening. I'm even told that now they are into loans. If that is true, all I'm saying is that maybe this is a time for our regulator, i.e. the Bank of Ghana, to also look at regulating them and making sure that the requirements is even for both the bank and themselves. It shouldn't be that if you are going to a bank, you need to fill 30 account opening form. But if you go to a fintech, you will have one. The risk is the same. So I'm just saying that Bank of Ghana should try and look at the requirements for these both, or perhaps for it to be a collaboration. Most of the innovations that fintech is coming with should be done hand in hand with banks. It shouldn't be possible for a fintech to just roll out a banking product. They should do it in collaboration with banks. That's how it is in other countries. So we should begin to look at that. We don't need to amend the act. All we are saying is that the playing ground should be leveled. So if a bank is required to get certain information before account is opened, the same requirement should also be made to a fintech, so that somebody will not say, I'm not going into banking because you guys are asking me to fill this number of account. I would rather go to fintech. If fintech has decided to go into banking, then the playing ground should be either watered down for the banks or also stricter for the fintech groups.
The Vice President of the CIMG, Daniel Kesati, also says the central bank must embrace technology in tightening regulations.
Yes, regulation is good because we are dealing with people's monies here. And so the way banks are regulated, yes, fintech companies should be regulated, telcos should be regulated. But the degree of regulation is what we may have to look at. We cannot do regulation the way we did it 20 years ago, 10 years ago. Things are changing very fast. Maybe the regulators would rather have to be forward-looking and see how they can also embrace technology so that they are able to facilitate the role that banks, fintech companies, and the telcos are playing.
Data from the Bank of Ghana indicates that volume and value of mobile cash transactions have increasingly recorded significant rise since its inception.
Now, Vodafone Ghana is partnering with app developers in the country to fast-track the growth of the local tech industry. The initiative, which is geared towards infrastructure sharing, is expected to create an avenue for tech startups and app developers. Speaking on Joy Business Leadership Program, the Executive Lounge, CEO of Vodafone Ghana, Yolanda Kuba, explains the importance of incorporating local developers into telecom giants' agenda.
What we've looked at technology as previously is around automation. Take a manual process and then just automate it. That's how we've looked at technology for a long time. Now we're actually looking at it and saying, how can the intelligence in technology actually leapfrog us forward? There are many applications for that to happen. It happens in financial services, it happens in manufacturing, it happens in telecoms. So as I said, we use some of our own solutions. What does then that generate? It generates new areas of revenue generation. Let's say 10 years ago, the US didn't even know that you can actually get as much money as they do from Google today or from Facebook today. And that's all new. That's all new revenue sources, new capabilities that we're actually building across. And in Ghana, we're no different. I mean, when you actually start looking deeper into Ghana, you look at some of the app developers in the country. There's so many of them. There are so many of them. We're starting to use them because obviously now we're specifically looking at those individuals and saying, how do we embed some of their solutions in what we do so that their businesses can also be sustainable? We're opening up what we call APIs. So we actually open up our own infrastructure for third parties to actually connect to them so that they can generate new revenues for themselves so that they can actually have a sustainable future as well. What does that do? It actually creates a new ecosystem within the country where we're able to actually attract new skills as well.
All right, so the full story will be on tomorrow on the Joy News channel. Now, moving on, the World Trade Organization, WTO, is advising developing countries to add value to their exports so as to make more gains from international trade opportunities. Africa currently plays only a marginal role in world trade, and its share of global exports is 2.4%, with sub-Saharan Africa accounting for just 1.7%. Yet for these countries themselves, world trade in fact plays a major role. Sheila Tamaklo takes a look at Ghana's participation in international trade.
International trade links various economies around the world for enhanced productivity. International trade liberalization and regional integration has, for instance, boosted Ghana's economic growth, especially in recent years. Apart from being a member of the ECOWAS, Ghana also recently signed on to the World Trade Organization Trade Facilitation Agreement. But how is this supposed to boost the country's economic growth?
What the WTO really does is it offers you predictability. It says that if you're a member of this organization, you have to treat everybody in a way that does not discriminate in terms of what you expect them to pay when they're importing into your country, in terms of the standards that you're setting. So you can imagine that if you're not part of the WTO membership, a member or a country can treat you however they want. They can decide tomorrow if you want to import something into their country, they can charge you a tariff of up to 100%. Whereas in the WTO, we have a set of obligations where you have strict rules that say if you have made a legal commitment not to increase an import tariff by a certain amount, you cannot do that. So that's predictability for Ghana.
Ghana is the 84th largest export economy in the world. In 2016, Ghana's exports increased from $10.5 billion to $11.06 billion, whereas imports declined from $13.8 billion to $12.74 billion in 2016. Despite the improvements, Ghana, like many developing countries, rank low in cross-border trade.
Intra-regional trade is something that stands out. When you have in a huge continent like Africa with so much entrepreneurial activity and so much dynamism, only 15% of African trade is with other African countries. That needs to be improved, and this is something that has been recognized by leaders across the continent. This is why the Continental FTA is underway. This is why ECOWAS is tightening its integration, putting in place a common external tariff, and trying to bring down barriers within the 15 countries so that they can enhance opportunities for entrepreneurs here.
No matter how compelling the case for free trade is, barriers continue to pose a huge challenge. Barriers in forms of tariffs, import quotas, and export restrictions continue to linger at both the global and regional level.
The ECOWAS trade liberalization scheme have been in place since 1989. Yet if you look at the trade, intra-trade volumes and values between within the region, it's very small, just about 10%. Well, all because of the non-tariff trade barriers, that have artificially been put in place for ECOWAS products. We recently signed a CET, which was supposed to harmonize our tariff system and to allow for free trade. Yet implementation and the political will have become issues.
There are, however, arguments that tariffs are needed to protect domestic firms against dumping by foreign producers. Countries like Ghana are taking steps to prevent dumping, which has been cited as a concern for many local manufacturers. Government has in this light recently initiated moves to establish a commission to check issues of unfair trade practices and dumping. This, according to the WTO, is backed by its trade facilitation agreement with clear rules against dumping.
The issue of dumping is a problem, and it's a problem that's recognized in the WTO. We actually have an agreement called the Anti-Dumping Agreement, which provides a procedure under which you can try and address this. If you notice that somebody is actually dumping, and dumping means somebody is selling a good in your market cheaper than it sells in its own country, then you have to go through a certain process where you demonstrate that, and in fact the country will be then asked to address that issue.
That's notwithstanding, the Organization for Economic Cooperation and Development, OECD, believes that implementing the trade facilitation agreements could reduce global trade costs significantly, much to the benefit of developing countries like Ghana. To fully reap these benefits, stakeholders agree that there will be a need for some targeted reforms.
The exporters have to be very well educated, and that should be the role of GEPA, Ghana Export Promotion Authority, to segment the market, to know the needs of every exporter need, those that are experienced, those that have the intention, then those that are new. All of that would have peculiar needs that have to be met.
As a nation which largely exports agricultural produce like cocoa, as well as minerals in their raw forms, the need for value addition to maximize economic benefits of the resources cannot be overemphasized.
And what's important for Ghana is to see and to look back at how has the system worked for us. What are some of the challenges that we are facing? For example, Ghana, as you know, is quite a large cocoa producer. And when cocoa prices are falling, this could obviously be a problem for Ghana because you're not getting as much value from your cocoa. So the question would be, is there a way that we can add value to this cocoa so that, we can move up the value chain and maybe have more advantages with respect to this?
There is compelling evidence that improved trade can lead to economic growth, and for Ghana, the outlook remains positive.
And in another development, the national president of Borderless Alliance, Ziad Hamoui, is calling for government to accelerate the implementation of reforms in port and border management procedures in the country. Although the alliance welcomes government's introduction of a paperless system, which takes effect from September this year, they believe strict implementation of policy-driven reforms is what the country needs. Ziad Hamoui says Ghana needs to step up its compliance with the World Trade Organization's Trade Facilitation Agreement to ensure the dream of becoming the trade gateway in Africa is realized.
First of all, we have what it takes to become the hub for West African trade, both import, export, and into the landlocked countries. And I think we have the leadership in place that will drive the needed changes in order to, first of all, harmonize the trade requirements across the sub-region. First of all, with regard to the documentation through Ghana, in and out of Ghana, to mutually recognize some of these documents when the trade is passing through Ghana. And second, to reduce the bureaucracy that is available at the points of entries and at the crossing points when it has to do with international trade. We have several tools that can help us to improve our efficiency, some of which include the Trade Facilitation Agreement, which recently entered into force in February. But we also have a standardized common external tariff across West Africa. So now any cargo entering through any point in West Africa basically is supposed to receive the equal duty structure across the region. So that should eliminate some of the costs associated in doing business within the sub-region. I think it is very possible to reduce both the time and cost of doing business by eliminating or reducing to the barest minimum the human factor. It is already, you might not know it, but we already have what it takes in our clearing system to go paperless. The procedure is just there. But we are not making full use of it because we need to still have loopholes in the system to exploit for our benefit sometimes, but it ends up to our disadvantage. And in my opinion, it is best to just do away with the human factor where we can, redeploy whichever agencies are involved in the procedure in other areas of the clearing procedure, or move out of the clearing procedure completely.
The national president of the Borderless Alliance, Ziad Hamoui, who is also the executive director of Tarzan Enterprise, which specializes in trade logistics, is concerned about the increasing cost of doing business in Ghana.
Ghana is becoming more difficult to do business. And we don't take the doing business index to tell us this, but it's reflected in the everyday business at the ports, but also in the market. So there is a problem somewhere. And that is why the decision makers and the policy makers are looking at ways to create a more enabling business environment in Ghana in order to project it to become the champion in West Africa, and even, as our president himself has said it, the #1 destination of doing business in Ghana. And that is possible because all it takes is strong political will and leadership and vision about where we are, where we want to get, and how we want to get there. And the way to move forward is to reduce the costs of doing business, to reduce the unnecessary delays in doing business, to make setting up businesses more easier, but that is no longer the domain of the Borderless Alliance. So I'll try to stick within our domain as an advocacy group promoting regional economic integration. We believe that reducing the cost of import, export, and transit will go a long way into reducing the cost of doing business overall, and it will go a long way towards helping making goods cheaper at the point of entries for consumers. And consumers will eventually provide the growth engine that is needed for our businesses. And then if the policymakers create more enabling business environment for the business owners, that will encourage them also to reduce their costs for the benefit of the consumers.
The Borderless Alliance also believes a more efficient transport system in port operations results in more trade, which in turn yields stronger economic growth. The Regional Trade Advocacy Organization looks forward to a West Africa where all barriers to free movement of goods and people are removed in the interest of regional integration.
You are still well controlled in the system, and the security level is minimum, but you don't see it. And so I would like us to get to a point where we move freely across the West African region as individuals, as businesses, and I would like to partner with all of the stakeholders who are involved in order to achieve that vision of free movement of goods and people across the region as foreseen and foretold by our founding fathers of ECOWAS.
Now to some petroleum stories. And the Chief Executive Officer of the Petroleum Commission, Theophilus Ehwering, says there's necessary measures in place have been instituted to ensure that Ghanaians benefit from the growing oil and gas industry. He was speaking with George Wiafe yesterday at the commissioning of the John Ejokunku FPSO offshore in Takoradi.
No, I think we must pat ourselves in the back. There's no doubt about it. It's about 10 years since we made the commercial discovery of Jubilee. And since then, we've been developing this industry on all fronts, in terms of legislation, in terms of capacity building of the people. And today, what we are recognizing is yet another development project moving on into production. And the good thing about this project is that in this project, and with the two others, all gas resources would actually be interconnected and produced. This doesn't happen that very often in sub-Saharan Africa, and I guess it is good news for the industry.
The concern is about as we expand, are we also expanding that local content base to ensure that indigents are getting the expertise to manage the facility?
It is worth mentioning that on this project, about $1.8 billion of the $6.2 billion expended went into indigenous companies. Remember, this is an amount bigger than the capitalization of all the banks in Ghana put together. It is a major achievement.
So you believe that a lot has been done to ensure that Ghanaians will take over?
This did not just happen. It's come through a lot of effort of building capacity. I mean, you've been part of some of the capacity building programs you have done, and the essence of it is to build the Ghanaian expertise in the way that they will be able to compete not only among themselves but with any other international competitor on the market. I think they're getting there. Today, there are a number of the scopes that are conducted just by indigenous companies alone.
So you Ghanaians should be excited, right?
We should be excited.
What's your expectation?
My expectation is that we will grow. I think we're on course. We must not derail the process. We must continuously build capacity. We must take the jobs we get seriously and excel in them. We must manage costs so that we become competitive.
All right, so moving on. Total Ghana Limited leads this week's trading activities. The CD registered mixed trends against the major trading counterparts, and Ghana's 3 major export commodities ended the week on a negative note. We've been joined on the line by our stock market analyst, Aseya Kotia, to give us more on this particular development. Good afternoon, sir. Welcome to the marketplace.
Good afternoon.
All right, so what accounted for this performance of the equities?
Okay, we all know, this week is also a 4-day trading week, and generally this 4-day trading weeks affect the time given to investors to exchange hands, that's shares exchanging hands for money. So generally reflecting a downturn on the back of also last week's dominant performance. Usually you have the market kind of retracting after a week that was dominated by 3 major trade volumes, that is block trades from Farm Oak, Guinness Ghana Limited, and I believe GCB. So I believe the market is just kind of rebalancing and taking shape for the week. And so you're seeing less activity.
All right, so didn't we witness any gains by the financial equities?
There has been some gains. You have Ghana Commercial Bank, which has gained about 5.4%. You have Standard Chartered Bank, that also gained some, I think, 2% or so. And so you have some gains from the financial stocks. Nonetheless, you have a lot of people kind of taking up the profits or the price gain that they've experienced in the first half of the year. So the financial stocks were selling first half of the year. You now have a bit of supply because people want to cash in on these gains. And so you don't expect the same trend probably next quarter or so. But generally, financial stocks are still strong and they're adding up positively to the general trend of the market.
All right, now, the city experienced a mixed trend. How or what exactly is the performance of the Ghana cedi against the other trading currencies, especially the US dollar and the pound sterling?
Okay, against the US dollar, it's lost some value. That's just 0.04% or 440 basis points. And it's currently trading at an average rate of $4.365. That's per dollar. Cedis per dollar, I beg your pardon. Against the pound, however, we've gained some grounds, trading at an average of 5.657, as against 5.665. So the cedi has recorded some gains against the pound, but lost slightly against the dollar. And against the euro as well, there's a slight dip by 10 basis points, and it's currently trading at an average rate of 4.977 cedis. That's per euro.
All right. What about the commodities? Did gold see any improvement? Did oil also pick up in prices?
No. I mean, crude oil has been suffering for some time now. It looks as if both cocoa just joining temporarily. All 3 major trading commodities for Ghana are currently recording losses. Crude oil is trading at an average $46.69 per barrel. Gold is $1,221.54 per ounce. And cocoa, $1,914 per metric ton. All these figures are below what they were even trading at yesterday. And so it looks as if the commodities are ending the week on a negative note at the back of excess supply or the supply pressure outstripping the demand. That I can say is not too good news for us, but we're hoping that by the end of the trading week, across all the markets, Asia, America, Europe, and also Africa, we'll have a better performance from these commodities.
All right, so what do we project into next week? How is the performance of the market, entire market, going to be like next week?
Okay. Standard Chartered Bank, I believe, will still continue with its stellar performance. You can see this from the demand we are seeing on the market. People are willing to pay much more than what even the current price is. And so you have the upward run. Currently, the stock is trading at 17 CD51 pesos, but people are bidding as high as 17 CD66 pesos. That's about 14 pesos or 15 pesos above the current market value. So they expect Standard Chartered Bank to end the week well, and also next week have a good performance on the back of this excess demand. We also expect Enterprise Group to continue enjoying from the news that was made public at the beginning of the week. I also expect Bob to also have a good week next week. So these three commodities, I believe investors can keep their eyes on them.
All right, thank you so much for your time. Aseya Kotia is a stock market analyst from Nordia Capital. It's now time to take a break for Dauphin Finance's investment tip.
Brought to you by Dauphin Finance, deposits, investments, borrowings, and advisory.
Investment objective, the risk question. What are the risk expectations? That is, how much money, including the principal, are you willing and able to lose? What are the risk tolerance levels? The extent to which an investor is risk averse. What is a risk quantification level? This is a percentum of income or principal an investor is willing to lose. Risk return trade-off. Higher risk acceptance goes with higher returns. The reverse is also true.
Investment Tips was brought to you by Dauphin Finance, deposits, investments, borrowings, and advisory.
And that will be it for this afternoon's edition of The Marketplace. Thank you so much for joining me throughout the week, and do have a pleasant weekend. My name is Emmanuel Akwachi. Good afternoon.